It's just you people for me. Welcome, welcome, welcome. Let me confirm if the audio is okay. Oh, we're good, we're golden, we're blessed. I feel good today. I feel amazing. We are to have CPI in the next few, less than 57 minutes to go. We do have quite a bit of time to prepare for the market that is ahead of us. One of the most important things to do is let me highlight myself here first. Welcome. My name is the King's Prince, the owner and the curator of the Golden Print. I've been trading in the financial markets for over 5 years right now. I've seen it all. I've witnessed it all. I've seen the highs, the lows, what comes with financial trading. There's so many myths and misconceptions that go about news trading. There's so many misconceptions about, and it's normal because there's a lot of information overload outside over there. My purpose is to demystify what forex trading is, especially when it comes to news related matters like what we are about to do today in terms of trading CPI, consumer price index. This is something that the government, the national government, the Bureau of Labor Statistics usually release this data. This is something that you cannot cook and it does affect prices. Now, I want us to go through the data slowly by slowly, find my rhythm within the noise. Yes, the markets are very noisy, but there is a rhythm within the noise. And this is how I usually start my trading sessions. So if I can just share my screen. It usually starts with news. This is trading economics, and this is one of the websites that I usually use in terms of looking at information apart from Twitter. Nowadays, Twitter is more likely to be used in terms of because it's much quicker. There's a lot. It's not mainstream media, but I usually like looking at platforms, websites that has everything under the same roof, if I can put it in that way. Now, when you're looking at trading, there's so many. Let's say Forex Factory. This is the easiest one that most of the people use in terms of its simplicity. It's not that complex, and it's much more presentable to a person who's starting to learn about trading. I would advocate for you to look at Forex Factory. If you look at today is Wednesday, the 11th of June 2025. It's week 25 of 2025. Quite interesting. And looking at the economic calendar, we do have now, I'm situated in East Africa, East African time. We do have CPI coming around in the next 54 minutes or so, whereby we do have the core CPI, the CPI itself, and the CPI year on year release, whereby we do anticipate inflation numbers to come out slightly, almost, almost exactly. I don't want to put it because the data is not yet released, but if you can see anything below 2.5%, it will signify that the economy is generally headed in the right direction, and it will prompt the Fed Reserve to start lowering their interest rates. Going back to trading economics, I want us to start looking at a few data. Not a few, but quite some data. Now, looking at, excuse me, looking at trading economics, we do anticipate inflation rate on the year-on-year release to come out at 2.3%, which is quite lower than the consensus we do have and the previous number at 2.5%. Whereby if the number does come, also the previous number is 2.3%, we are having a consensus of 2.5, a slight uptick in the CPI numbers that we are going to anticipate today. Now, if the numbers do actually come out below 2.5%, the Fed Reserve is going to be prompted to lower the interest rates very soon. If we can go to the Fed Watch tool, this is a good website that I use in terms of looking at what the Fed are most likely to do in the next few. When you're looking at this, in the next 7 days, 6 hours to go, we do anticipate the Fed Reserve to have their meeting. Let's wait for the website to load. And as you can see, we do have a 99.9% chance that they are going to have the interest rates between 425 and 450 basis points. Now, when the data does come out today in the next 52 minutes or so, we are going to have a consensus change in this data. As you look on the 18th, so that's when we are going to have the next FOMC meeting, which is going to be next week on Wednesday. If I can go back to Forex Factory and then look at the calendar, go to 18th of next week. As you can see, at 9 p.m. local East African time, we are going to have the federal funds rate. At the moment, we do have the interest rates between 450 basis points. But this data that is going to be released today is going to affect what the Fed Reserve are more likely to do in the next few FOMC meetings. It doesn't have to be this one exactly, but there is a very high likelihood that we might see an interest rate cut in the upcoming few months, whereby after 18th June 2025, the next FOMC meeting we are going to have is going to be on 30th July, whereby we still do have an 85.5% chance whereby the Fed Reserve are going to hold the interest rates, but only a 14.5% chance we are going to see almost a 25 basis points cut. Now, when this data is going to be released today, these numbers are going to change, okay? I want you to keep we shall keep note of this. By the recording before the stream, before the news release, we do have these numbers at 14.5% on 30th July. When the data is released, there is a high likelihood that we might see these percentages being changed. And as you can see, this is CME Fed Watch tool, okay? So this is a very good website that you can be looking at in terms of interest rate, not only interest rates, but a lot of things that you can be looking at under the CME Fed Watch tool. If you can go to 17th September, now this is where the data gets interesting, and this is where forecast pundits, I myself included, are really looking into, whereby we might have the first rate cut September 17th, whereby there's a 52.2% chance we might see the interest rate cuts between 400 and 425 basis points, which is essentially 25 basis points cut from where we are currently at the moment. Now, when the data, mark my words, when the data is going to be released, these numbers are going to change significantly. As you can see, we were anticipating, when the year did begin, we were anticipating at least 2 rate cuts. But this data that is going to be released today is going to be very pinnacle for the Fed Reserve, especially Mr. Jerome Powell, whereby we have been seeing a lot of things happen in the United States of America. Right now, they are still in talks. We shall look into that data in just a moment's time, whereby there are talks currently at the moment between US and China in terms of trade relationships. Now, pundits are saying that things are going nicely, but when you look at the charts are talking about something totally different. And bringing back us to federal funds rate, or the interest rates to be exact. Now, interest rates are very crucial. They're really, really crucial for us traders to be looking at. Not only traders, but if you're a citizen, if you are into the financial markets, if you want to study Forex, not only Forex, but if you want to be sane in terms of money, okay? When you want to be financially literate, and this is what the channel is all about. If you want to be financially literate, you need to be looking at this data, because inflation is directly corresponding to spending, okay? When inflation is very high, it means goods are very, very expensive to buy for the consumers. The consumers basically don't have enough to buy. Now, on the other hand, deflation means that, let's say, for example, a tomato. If a tomato is retailing at, let's say, 10 cents, if inflation is higher, a tomato that was retailing at 10 cents will now be retailing at, let's say, for example, 20 cents. Now, you will find that the prices of tomatoes has gone up almost 100%, which means that there is some economical strain on the economy, whereby goods are being sold at a much higher price because of the inflation. Now, on the other hand, if there's too little inflation, let's say, for example, a tomato that is supposed to be sold at 10 cents is now being sold at 5 cents. It means that, okay, farmers are not getting enough profit. There's not enough margin for them to make a profit on the goods and services that they're offering. Now, this is very crucial. This is very crucial, because the central bank will intervene, and this is the purpose of a central bank. A central bank is there to find a balance between low inflation and high inflation, looking at the country's interests while also looking at the citizens' interest. Because when you look at high inflation, generally what will happen, the central bank will be forced to raise interest rates. Okay? Now, when they raise interest rates, what they tend to do is attract money into the country, whereby treasuries are going to be much more appealing. Bonds are going to be much more appealing. But at the same time, the local citizens are going to be hurt the most. Why? Goods and services will be higher. There will be so much pressure on the citizens down below. There'll be so much pressure on the working class for them to feed the country. On the other hand, when you're looking at low inflation, what the central bank will tend to do is lower interest rates. Now, when a central bank lowers interest rates, basically they're advocating for the citizens. Go to the banks. We have made loans cheaper for you. If you are taking out a loan at, let's say, for example, 5%, we have lowered it by 1%. If you look at what has been happening, especially after, and this is something that usually is connected to one and each other. When the United States either lowers or raises the interest rates, most of the countries follow suit. Now, it doesn't mean necessarily it's a must for them to, if the US lowers their rates, all the countries lower. No. But if a central bank lowers the interest rates, it's going to be good for equities. Why? Because these small businesses, these small enterprises are being advised, okay, go take out loans. Loans are going to be much cheaper. This will do something to price action, and this is whereby it's a very fine line. It's not a fine line, but you can say it's a piece to the puzzle, whereby fundamentals usually are a piece to the puzzle. When you look at economic data, macroeconomics, the biggest challenge that traders face is applying these fundamental news releases to price action. And this is why I'm here. I want to show you today how you can be utilizing this information and making much more better informed decisions when it comes to technical analysis. And this is how we are going to go about it. Looking at today, so we do have less than 44 minutes to go, which is quite some time to be looking at these data. As you can see, there are four releases we are looking at currently at the moment, but Forex Factory is going to show us only three, okay? I'll talk about the fourth one. Now, the first one is the core CPI, and then the second one is the CPI itself. Now, the difference between the two, the core CPI is going to exclude food and energy, okay? So the core CPI is going to exclude food and energy. Why do they exclude food and energy in the core CPI? Because food and energy tend to be very volatile, okay? When you're looking at perishables, when you're looking at volatile assets, when you're looking at volatile commodities, like let's say, for example, if you can take an example in the agricultural sector, there are these times in the United States and most of the places whereby when you get a poultry farm, let's say, for example, let's say you have a very big poultry farm, you have a lot of birds that you keep and you raise them for eggs and meat and so on and so forth. Now, in case there is any diseases outbreak, most of the flocks do not survive, agricultural speaking, because of biosecurity. It's a very, very, very keen sense to be looking at it, whereby, let's say, for example, there's an outbreak of, let's say, for example, Newcastle disease, which is a disease that affects most of the poultry, and it's economic widespread. Or let's say the beef, there is an outbreak of foot and mouth disease in cattle, whereby they most of the times what they do tend to do is they vaccinate the animals and then they say, okay, for the next 2 months or so, no beef product should be sold. You see, when they do this, it's going to bring a different number from the reality. So when the CPI is going to be released, when inflation numbers usually come out, they usually segregate it into two. The first one is going to exclude food and energy. The second one now is going to include food and energy. Now, the usual effect is actual greater than forecast is good for currency. Why? Because when consumer price index is high, this means that more money is in circulation, so to say. When you're looking at deflation numbers, it means that money is not that much in circulation. Now, the frequency is usually released monthly, about 16 days after the month ends. So it's usually released on the second week of the month. And there is a categorical way of how they're released. So the first week, last week, we had unemployment numbers, and the numbers actually came out good. If you can just look at it at the moment, whereby we did have almost 139,000 jobs being added to the US economy. Now, the forecast was 126,000. The discrepancy between the forecast and the actual number is not that much. Now, for the job market to really have an impact is whereby we are forecasting, let's say, 126,000 jobs, and the numbers actually come out way better than expected. That's when you can say that the unemployment numbers are usually going to affect prices on a large scale, because we want to look at prices movement as a result of economical news releases. Now, unemployment came out at constant 4.2. When you're looking at the United States, the basis is usually 5.7%. So anything below 5.7% in the United States of America is usually considered good. Average hourly earnings actually took an increase from the previous number of 0.2%, whereby we can see in the United States, people were paid almost 100% better, 100% better compared to the last previous numbers, which was 0.2. The number actually came out at 0.4%. On the second week, which where we are currently at the moment, we receive CPI numbers. And then later on during the week, we are going to receive PPI numbers. When is it going to be? Is it going to be tomorrow? It's going to be tomorrow, whereby we are going to receive PPI numbers. So CPI is going to be consumers, PPI is going to be producers, okay? Now, how does this impact news in the financial markets? It's because after employment numbers, inflation numbers, then we do have the central bank policy, whereby if you look at, if you go to my previous streams, I do believe it's in one of my streams, whereby we were live trading Jerome Powell's speech. And Jerome Powell was asked, what are some of the data that you look at in the financial markets? It was very interesting because the first thing he mentioned was employment. The second thing he mentioned was inflation, basically how it is in Forex Factory. So the data that we are looking at currently at the moment, Jerome Powell, wherever he is, he's looking at the same piece of information. We can say maybe he has the information way earlier than we do because he's part of the system. Who knows? But we are not here to debate that. The most important thing is if the numbers come out positively, he's going to look at it. If the numbers come out negatively, he's going to look at it. And at the end of the day, the Fed Reserve is tasked with the mandate of finding a balance between low interest rates and high interest rates that are going to favor the economy, but at the same time, it's going to favor the citizens themselves. Because when you look at financial markets, it's always a coin, okay? It's always a coin, whereby if a certain part is doing well, it's a cause and effect, okay? As above, so is below. If one side is doing generally well, the other side is not doing generally well. It's very rare to get both sides, and by both sides, I mean the government doing well and the citizens doing well. Now, give me some time to explain this, okay? The government is a business. Technically, it's a business. They're in charge of running the economy. Now, higher interest rates favor the government. They favor the financial system. Why? Because they are attracting investors. They are attracting money from outside into an economy. Basically, they are telling other investors from outside, come invest in us. Your returns are going to be much greater. But on the other hand, higher interest rates affect the local citizens, the working class. Why? Because all of a sudden, you are going to get loans which are much more expensive. You're going to get goods and services that are going to be charged more. Okay? On the other hand, whenever you get low interest rates, basically the government, whatever it offers in terms of treasuries, bonds, becomes less attractive. Because for what you are getting when you are paying higher interest rates, when there are higher interest rates, they now look less desirable. The bonds look less, they look less desirable, treasuries, and so on and so forth. But this is good to the local citizens, to the working class, especially. Why? Because and the small, medium enterprises, they're telling you loans are much cheaper. If you go to a bank right now, instead of paying 10%, we have our interest rate as 5%. Now, the central bank does that to find a balance. Now, on the left hand side is the government, which is a business. On the right hand side is the working class. Okay. Now, here in the middle, this is whereby we get the central bank. Now, the central bank are tasked with the mandate of finding a balance. You can say that, yes, they lean more to the government side because technically the government is the one that appoints the central bank. Okay. But they have to look at, they are independent. According to the books, they are independent. But there are certain times when you look at what President Trump and Jerome Powell have had this abrasive side to their nature whereby words are thrown at each other, especially from the political side to the independent side. And you have to please your bosses to an extent. You have to please your bosses to an extent. You have to. You have. They're the people who put you there. Even though you have mandates and all that, you have to be looking at your job in the near future. Going back to this information, the central bank usually now this is we are still in macroeconomics. We are still in. I never studied business, FYI. I never studied business. This is something that I cannot say I taught myself, but as a result of being around the right people who are also traders, I got to understand macroeconomics. I got to understand how employment affects the economy. I got to understand how interest rates affect the economy, inflation numbers, and so on and so forth. So today, in the next 34 minutes, we are going to receive inflation numbers. It doesn't mean the markets are going to crash or the markets are going to do this. No, it's all about the rhythm within the noise. There is a lot of noise out there, especially in the financial markets. So much money moves around, and yes, you can say that money doesn't make a sound, but people who move it make a lot of sound. We want to find pieces to the puzzle, the rhythm. There is noise, but we want to find a rhythm. We want to find that tune of whereby, okay, what can we learn about whatever is happening currently at the moment? So this brings us to technical analysis. Technically speaking, if these numbers come out higher, actual greater than forecast is good for currency. Okay. And I've just explained why this is the case. But looking at the graph, so 2020, 2021, this was COVID era, whereby we had a massive tick in inflation, topping out at 9.1% in July 2022, which is exactly 3 years away, almost 3 years away. But the numbers started cooling down, whereby people were like, okay, we thought it was going to be the end of the world, whereby we are going to have zombies and all that happening, people walking around like zombies. But as time went by, this is the advancement in the medication sector, whereby people are like, no, it's just a flu. Okay, you wear a mask, sanitize, and then go back to work. So inflation numbers started cooling back down. People started regaining their jobs. If you look at also the employment numbers, if you can just look at the employment numbers, there was a correlation between, as you can see here, yeah. So the employment numbers went back down. So this was the peak of COVID, May 2020, whereby there was a deficit of almost 19,000, which was quite significant looking at the financial markets. If you look at the unemployment rate during the same period, we did have a very massive uptick of around 14.7% during the peak of COVID. But as time went by, people were like, okay, maybe this is just a flu. People died, and may their souls rest in peace for those who were affected. Um, but that's part of life, and it affects the financial markets. There are people who suffered during the COVID era, but there were people who made a lot of money during the COVID era. Once again, it brings me back to it's both sides of a coin. Okay, there's never an in between in the coin. Now, looking at the inflation numbers, we were looking at the year-on-year release, whereby inflation did hit at 9.1% during June, 2022, but the numbers gradually cooled down. As you can see, the numbers went back down. Now we are still at 2.3%. The central bank would want to have these numbers at below. Anything below 2% would give much emphasis to the Fed Reserve to lower the interest rates. Now, if the numbers, we are anticipating a slight uptick in today's numbers. We are about to see what is going to happen in the next 30 minutes or so. But if these numbers actually do come out lower than 2%, or in the next month, if not this month, then the Fed Reserve will be forced to lower their interest rates much more aggressively. Now, this is very crucial for us traders. Once again, very crucial because we are trying to piece in the pattern to the puzzle, whereby it's a very big puzzle. Now, I want us to separate our screen. I want us to go to technical analysis. There are positions that I am currently in, and I will want to break some of the positions down for you. Now, I did do this analysis in there is an analysis session that I did. If you go to my YouTube channel, the most recent analysis session for week 25, I did break down these trades that I am in currently. Starting off with gold. Looking at gold, we are in this channel. If I can highlight it, whereby we have been stuck in this channel for the past 2-3 trading days, and I want to see how prices are going to react either to the upper side or to the low side. Now for gold, I didn't gold dollar, I didn't execute it, but for silver, I did execute, whereby I was stopped out on this particular position for silver. Now it was a good stop loss. Why? Because prices rallied even far much higher than I would have anticipated. Yes, prices did come back down, but that's the price you pay for trading. I am in positions of US 500 currently at the moment, whereby I did execute this buy position. Prices almost stopped me up, but this is the good thing of having a stop loss that has a breathing room. And I will talk about this in one of the videos very soon, whereby how do you place your stop loss? That is something that took me quite a while to figure it out. But looking at it currently at the moment, this is one of the best trades that I've ever taken in terms of risk to reward ratio. I am in positions in the Nasdaq currently at the moment, the Russell 2000 also in positions currently, stop loss advanced to break even. I am in a position in WTI currently at the moment also, very good, doing good. I'm anticipating prices to hit $69 a barrel in the next few trading weeks. I am in positions of GBP USD. This was a beautiful sell that I did catch when the week did begin. Massive, massive, massive into profits. My stop loss is advanced to break even. So whatever happens in this trade, I'm going to be safe. I'm also in do I have any other positions that are USD JPY? So I'm in a position of US dollar against JPY also. One of the very beautiful trades that I have executed in a long time coming. But today I'm going to focus on gold because I like trading news with gold. It's not advisable, and I won't want you also to start trading news, especially with gold, because it can be crazy. It can go crazy very quickly. Things can get messy very, very, very. I cannot stress the very so much, but very quickly. But at the same time, the higher the risk, the higher the rewards. And if you do play your cards right, if you do have a strategy, if you do have an edge in the markets that is going to allow you to execute news trading like what I'm about to show you today, then well and good. Well and good. It's one of the best things that can ever happen to you because you can make a quick buck quickly or you can lose bucks quickly. So let me remove these. Let me remove this and then we have an analysis, both of us together. Now, on Monday, I was looking at points of interest. Usually, when I start the week, let's say, for example, this was Tuesday, this was Monday, this was Friday, I usually identify highs and lows because the forex markets usually gravitates from regions of liquidity to regions of liquidity. What I do mean by saying is money looks for money. Okay, that's very simple. Money usually looks for money. When you're looking at the financial charts, it's no different. Okay, especially when you're looking at gold. Now, looking at gold, gold is one of the interesting commodities, asset classes that you can be trading in the financial markets because gold is emotional. Gold is a very emotional asset. It's fearful. Whenever there's fear in the markets, people usually buy it. Whenever there's greed in the market, people usually sell it. It reaches a point whereby you have to ask yourself, what is the current mood in the financial markets currently at the moment? Now, you have to have a few other assets that you can be looking at. Let's say, for example, you can be looking at the volatility index to gauge the volatility strength in the market. So currently we are trading at 16.9, meaning there's a 16.9% chance the market can move in either direction in the next 1 year. And also the dollar index is a good tool to also be looking at in terms of sentiment analysis when you want to execute on gold. Okay, excuse me, I've had a very nice massive lunch. Now, looking at gold, as I've mentioned, let's break it down from the higher time frame moving down to a lower time frame to get a perspective of what the markets are doing. So we are going to start with the monthly. As you can see, the monthly candlestick has 19 days, 9 hours to go. We did make an all-time high at 3,500 exactly back in April of this year. Then the markets rejected that zone massively. This was one of the massive retracements I've ever seen on gold in my life. Almost 15% retracement in almost less than a month. It was actually a few weeks. Then the next monthly candlestick opened with a doji. Now this candlestick currently at the moment, as you can see, we are on the second week of trading of June. Now this candlestick is still struggling to break last month's high. We are still almost, you can say almost near the opening price and closing price of last month, which was the candlestick of May. Now, looking at this data, this is whereby you have had a picture of the higher time frame. Yes, you can say that we are very, very massively bullish. But when you go down to lower time frames, if you go to a weekly time frame, then this is whereby the data starts to get much more interesting. Why? Because we are getting candlesticks that are printing side by side. Yes, we did have this massive bull run whereby it did last from actually the start of the year. Ever since the start of the year, gold shot to the upper side. So year to date, we can say that gold is almost year to date, gold is almost 32% up in profit. That's quite significant in almost 154 days. Quite significant. Quite significant in the financial markets, if you can ask me. And we still do have quite the trading year to go ahead of us, whereby we do anticipate things are going to be interesting. Now, these candlesticks that are printing side by side, this is whereby things in relation to Donald Trump started becoming much more serious. If you look at it, if you look at the numbers ever since the tariffs, so when Donald Trump took over office, this was during January, gold took this information very negative against the dollar. But on the aspect of gold, it was very positive. Why? Because the markets were uncertain. This guy could come back and then it took us to back to 2017, whereby the markets were being run via Twitter. Donald Trump makes a post, the markets move like crazy. The markets, they do love Trump. Trump and the markets are this way. So having an X account right now at the moment is the best thing you can ever have. When you look at, this is a sidetrack here. When you look at an asset like Tesla, oh, I was supposed to buy Tesla yesterday before market open. Yikes. Anyway, when you look at this information, especially on the daily, look at this previous candlestick. This was when Trump and Elon Musk had a fallout. We did see shares of Tesla take a tumble just because of two grown men arguing. We did see Tesla lose more than 20% during that period, which is quite significant. Let's say if you have $100, two people argue out of nowhere, and then all of a sudden your account is at $80. And you see, that's quite interesting to look at the financial markets, but we're having a recovery. Very interesting. Yeah. We are having a recovery currently on the trade markets. So looking at gold, when the tariffs started to hit, this is whereby we started getting this choppiness in the markets, whereby the markets were very uncertain in what is about to happen in the next few trading days. And afterwards, the markets usually come back down. Yeah? People are like, okay, we are getting into a recession. Things could be getting out of hand in the next few. People are going to blow their life savings. Oh, the fear was being spread out. If you go to YouTube, if you go to any mainstream media, there was a lot of fear in the markets, a lot of uncertainty in the markets, and this led to most of the people. When you look at the S&P 500, this was when there were tariffs. This was when the tariffs were hit, and look at what happened. The markets have never corrected itself like it did. In less than 65 trading days, the market corrected itself more than 25%. This is one of the best gains the S&P 500 has ever had in its lifetime in terms of the duration and the percentages that it gained. Why? Because people bought the dip. This was the first time in history whereby whenever there was fear, people actually bought. Whenever there were masses, people are like, okay, let's take this positively. Let's take this positively in the sense that it's not the end of the world. Yeah, it's just Trump, and Trump is going to be Trump at the end of the day. This is going to give us an opportunity to buy stocks at a much cheaper price. And that's what most of the people did. And we saw this massive, this beautiful rally, not only on the S&P 500. When you look at the Nasdaq, and Nasdaq also did gain massively. We are currently, there's a high probability that we might see all-time highs in the very near future. And this is why I do have my take profit just above that region. Why? Because I'm anticipating that whenever prices approaches all-time highs, there's usually a magnet. There's usually an influx of liquidity that comes into place whereby the markets usually shoot up. Why? Because money follows money. Looking at the US 30, same thing happening. I'm anticipating prices to take out the all-time high at 45,000. The Russell 2000, similar occurrence happening. I would want to see the all-time high being. I'm currently in these positions at the moment. Now looking at gold, I'm going to be very skeptical about it. Currently at the moment, we do have less than 18 minutes to go, which is quite significant for us to be looking at technical analysis. I'm going to show you how I'm going to execute these chart in the next few minutes. So looking at the daily candlestick, the previous 3 days, including today, let's exclude today. The previous 2 trading days, we did see these candlesticks print in a very peculiar manner. By this, I mean that there is no sense of direction in the financial markets, whereby the markets are trading in a channel. Now, whenever the markets are trading in a channel, it shows you that the market is gearing up to do something. Now, when you go to the 1 hour time frame, I do have session breaks. I like session breaks so much. This is one of the best things that ever happened to me. And my mentor told me one time, and I want to share this information with you for free today. This is something that took quite some time for me to to get it in my head. The price at which someone closed their business yesterday is very important. Okay? Closing prices are very important. Not only does it have to be yesterday, when you look at closing prices of the daily candlestick, even the 1 hour candlesticks, also the 4 hour candlestick, wherever prices close, because I believe this, and this is just my belief, you can take it with a grain of salt. The markets, let's say if you're looking at a bullish candlestick, a market will open, go form a low, then a high, and finally a closing price. If you're looking at a bearish scenario, a market will open, go high, form a low, then finally a closing price. My mentor told me this. This is a price of time. This is a chart of price against time. This can be manipulated. If you look at these prices here, these lows can be manipulated, these highs can be manipulated, these highs can be manipulated, these lows can be manipulated. What cannot be manipulated is this move. Okay? And I looked at it and I asked myself, like, what do you mean? What do you mean? I was so young at that point. I was so young in the financial market. Okay, what do you mean, like the highs and the lows can be manipulated, but not the bodies? And then as time goes by, he left me with one thing to do, because my mentor never spoon-fed me. And this is one thing I've seen people fail so much in the financial markets, whereby you want to be spoon-fed, especially if someone buys your mentorship. They expect that you tell them everything that you know, and that's a wrong analogy. It's going to make much more sense if you find it out on your own. Yes, I'm going to guide you. Your mentor is going to guide you, but it will reach a point whereby you have to row this boat on your own. And this is what he told me: just go back in time. Go back in time. Look at lows, especially Asian highs or Asian lows, and the closing prices. And then I started noticing a pattern in how prices deliver themselves. You will notice for prices to move to the upper side, usually liquidity is going to be grabbed. What is liquidity? Liquidity is essentially these lows. For prices to move, look at what is happening here. Look at this. Look at this. This is a perfect example. There is a war that currently goes on between ICT traders, smart money traders, and other traders. But we are fighting the same war. And this war is all about where money is. For prices to move, there has to be liquidity that is being generated and liquidity that will fuel a move. So there has to be an accumulation, there has to be a manipulation, and then there has to be a distribution. So what we are seeing currently at the moment is the accumulation, whereby the market moves up, grabs buyers, it moves down, grabs sellers, it moves up, acquires buyers, it moves down, acquires sellers, moves up to acquire more buyers, then moves down to acquire more sellers. These are the people who don't know what the market is all about. Now they find themselves in a position whereby they are in buys and sells at the same time. Not necessarily buying and selling one trader, no, but generally a mass of buyers and sellers. Now these people don't know what macroeconomics means. This is why you can't wait for Monday opening price, so people buy. You can't wait for the trades to come to you, you sell. And then all of a sudden, you are in positions and news comes out. So this news is going to create a massive liquidity. Yes, I am in positions currently at the moment, but my positions are protected. All of the positions I have currently at the moment, they do have stop losses at break even. Okay, all of the trades that I am in currently at the moment. Now, a stop loss is not a guaranteed way that the market is going to stop you out at a certain particular point. And I want you to demystify that myth. A stop loss is just an order that you're instructing the broker. If prices reaches this point, kindly tag me out of the trade. But there are certain special scenarios whereby, in terms of when liquidity comes so aggressive, that the broker is not going to fill you in or exit you at the position you wanted, and it's going to fill you or execute you out of the next available price. So let's say I have a stop loss at 6,011. There is massive liquidity coming at once, and then my stop loss is triggered or slipped. There is a possibility, yes, I do have my stop loss in profit, but there is always the probability whereby the markets can slip me, the broker, I can experience slippage, and I can lose much more than I had anticipated. Okay. Now, it doesn't mean that you don't need to use a stop loss. It's a good thing to use. It's a good tool to use, and you need to know where to put your stop losses. So looking at this price action currently at the moment, we have less than 11 minutes to go. I want us to look at this specific zone here. I want to mark that zone there. And I want to highlight this move. Okay, as you can see, my analysis is very simple. I'm not looking at fancy terminologies. I'm not going to be looking at all other blocks, no, nothing. Now, actually what I'm going to do is have this right here just to signify a trend to the upper side, and then I want to have another zone below here. Okay, then what I'm going to do, this is a no trade range. So under no circumstance am I supposed to execute prices in between here. Okay, it's a sin, it's a crime against trading to execute in between here according to my strategy. Okay, according to my strategy, you can do whatever you want, but according to me, I will never under the sun execute in a position in between highs and lows, especially before news releases. Why? Because I'm anticipating this news is going to come with liquidity. It's going to create a fuzz. It's going to create emotions around it to a point whereby it's going to attack either the highs or the lows. Now, this is whereby things get tricky. Where do I enter my position? So this is why I like using buy limits and sell limits. So what I'm going to do is have buy limits. What price is this? 33.15. So buy limits below 33.15, and then I'm going to have sell limits. What price is that? What is this high? 33.49. So we can have it at 33.50. Okay. So that's going to be my weapon of choice for today. So I'm going to have buy limits below 33.15, and then I'm going to have sell limits above 33.50. For those who are going to be interested, I'm going to execute this position live, and then I'm going to have it. If you want it, I can send it to you. So I've been talking for almost 50 minutes straight. So this is whereby you if you're a believer, I think I have a few minutes to talk about this. I'm not saying if you are a believer, but in Forex, it reaches a certain point whereby you will need to have faith in something you don't see. You can backtest as much as possible. You can be profitable yesterday as much as possible. But even the greatest acknowledge that even if you go anywhere, they do say previous performances are not an indication of what future performance will be like. So it reaches a point whereby you'll have, I don't know how to put it, because people have so many beliefs that they believe in. But it will reach a point whereby you'll need to to believe in something that you don't see, whether it being your strategy, whether be it having a lucky charm, whether it being believing in God, whether believing, I don't know. I know what I believe in, and it reaches a particular point whereby no one knows. There's a book by Mark Douglas, Trading in the Zone. No one knows what's going to happen next. Absolutely no one. If you go to a famous movie, Wolf of Wall Street, no one knows. No one knows what's going to happen next, unless it's insider information, of which if you do have insider information, that's illegal, but no one knows. No one knows absolutely what's going to happen next. No strategy has 100% win rate. If it did, we won't be here. Why are we here? Because I want to show you that trading can make a difference in your life. It's not a get rich quick scheme, but it's a skill that once it sets in, no one can ever take it away from you. You can sleep, wake up in 12 months' time, the skill is going to be within you. In the next, let me go down to a 5-minute time frame now. Okay, so let me bring this piece of information here, and then let me bring this piece of information here. So in the next 5 minutes, if this, okay, so this candlestick is going to close in the next 20 seconds. In the next 5-minute candle after this, when it closes, we are going to have the CPI release. No one knows. Once again, no one knows what's going to happen next. The most important thing is also you believe in yourself, you trust in yourself, you trust in your analysis. I'm anticipating prices moving to the upper side. So this will be my speculation. Prices grabbing liquidity above 33.50. We have a change in state of delivery, and then prices comes to attack these lows. Now, when it attacks these lows, then we might have another state of change in delivery, and then the market will continue with its move to the upper side. So this is what I'll be anticipating. I'm not saying this is what's going to happen, no, but this is what I'll be anticipating. So I'll look for selling opportunities. I want to look at selling opportunities, having sell limits just above this region. My stop loss is going to be very dependent on my entry price, but I want to look at something of this nature. So my stop loss, ideally, because this is news releases, I want to have it at around 150 points, 100 depending on my entry. So my stop loss is going to be very dependent on the entry. So this is what I'll be looking at. So let me download that image and then let me remove this. But once again, I'm anticipating a raid of liquidity above 33.50, then a change in state of delivery for a further push to the downside. So I would want to have a dollar cost average position, in the sense that I want to have a limit immediately prices tags this region, and then I will look for scaling opportunities to the downside, whereby I'll be adding more to this position. So this is going to be my opportunity, and what I'm going to do is switch over to my MetaTrader. And then I'm going to start screen recording. So currently at the moment, I'm in profits. I'm in good profits currently at the moment, but I want to execute a small position, a small leveraging position on gold, whereby I want to have sell limits. Where is XAU, darling? I want to have sell limits at so lot size. I'm going to stick with I can risk. Okay, I'm in $500 profit, so meaning I can risk $100. So if I go the 0.1, I'll go the 0.05. So I'm going to have my first entry there, which is going to be like 60 pips away. and then I'm going to scale in into another position later onwards with another 0.05. So according to my analysis, the sell limit needs to be above 33.50. So I'm going to have my first position at 33.48, and then I'm going to add another position when prices go against me. So well and good. Okay, so let's wait and see how the markets are going to behave. So we have less than 2 minutes. Let me separate my screen here. Okay, let me remove this market watch so that we have a clearer indication of what's going to happen. Less than a minute to go. So once again, this is a point whereby if you are a believer, if you believe in God, if you believe in anything, this is the time to call on that. Let's wait and see. So no one knows what's going to happen next. Let's say we are anticipating a slight uptick in inflation. Huh? That's according to the consensus. People are like, okay, we might see a forecast of 2.5%. So if it comes out at 2.5, one thing I want to keep a keen eye is what is going to happen next week, because this is going to have a very huge impact in what is going to happen next week. Because job markets are good. If inflation comes out lower, Jerome Powell is going to be forced to lower the interest rates. So we do have 13 seconds to go. Volatility has started picking up. Okay. It's not triggered. Oh my Lord. Triggered. Okay. So the position is triggered. Eh? So the first position is triggered. So the first position is triggered. So the numbers came out at 2.4%, which is not bad. It's a slight uptick from the previous number. Previous number was 2.3%. Slight uptick, not that bad. Looking at the month on month, 0.1, 0.1, not that bad, not that bad, honestly, so to say. So I'm in kind of a profit right now at the moment. Let's see what's going to happen. So this is a good time for me to have a stop loss. So I'm going to have a stop loss just above 100 pips. So that's going to be like 1,000 points. It's going to be like $50. So I'm going to have it at 1,500 points, which I'm going to risk like $75 on this particular execution. And then I'm going to have a take profit. So my stop loss is going to be at 33.63. And that's quite a healthy stop loss to have. Okay, 33.63, and then I'm going to have my take profit just below these daily lows. So 33.15. Okay, so a few positions have taken me out. It's okay. The ones that I had, okay, so UT 500, US 500, not UT 500, US 500. Oh, massive slippage. It hit take profit. I was wondering, it closed me out of break even. It's a take profit hit. My Lord. Look at that. Beautiful, beautiful trade. Look at that beautiful darling. I was looking at it and then I'm like, damn, break even. But yeah, look, oh my Lord. Oh my Lord. Look at that GBP USD trade. GBP USD has done me beautiful. Not GBP USD, US 500. I'm certain also GBP USD. GBP USD has taken me out on a break even. I advanced my stop loss to break even. USD JPY also took me out a break even. It's okay. It's okay. I made $300 today. Okay, not bad. Not bad. I still have positions running. So let's see how this is going to play out. But I'm going to look at XAU USD currently at the moment. So this is going to be the position. Let me delete this one. So this is going to be the position that I'm going to be in currently at the moment. So I've made money already. So it doesn't matter. I can risk. Yeah, I can risk some of the profit. $70 of $300 is not that bad. Okay, let's look at the data. They have not yet uploaded it. Okay, here it is. So this is from Bureau of Labor Statistics .government. So this is a government document. Now this is the document that is illegal to have before CPIs are released at the same time. As you can see, transmission of this material is not allowed until 8:30 a.m. Eastern Time, Wednesday, blah, 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 yada, yada, yada. So the consumer price index for all urban consumers increased 0.1% on a seasonally adjusted basis in May, after rising 0.2% in April. Over the last 12 months, all the items increased 2.4% before seasonal adjustment. The index for shelter rose 0.3% in May. So shelter and looking at new building permits did increase slightly. So that's interesting, and was a major primary factor in all items monthly increase. The food index increased 0.3% as both of its major components, the index for food at home and the index for food away from home, also rose 0.3% in May. In contrast, the energy index declined 1.0% in May as the gasoline index fell over the month. Yeah, oil prices did come back down. Remember, core CPI is going to exclude food and energy. Now, energy is part of oil, yeah? Oil is part of energy. The index for all items less food and energy rose 0.1% in May, following a 0.2% increase in April. Indexes that increased over the month include medical care. Interesting. Yeah, there was something about the medical care in the United States of America. We'll look into that. I'll look into that data very soon. But something happened over last month in the medical sector of the United States. Motor vehicle insurance, household furnishings, and operational personal care and education. The indexes for airline fares, used cars and trucks, new vehicles, and apparel were among the major indexes that decreased in May, especially new vehicles. Elon Musk is having a bit of trouble selling new vehicles in the United States of America. Quite interesting that this is going to be in the consumer price index. The all items index rose 2.4% for the 12 months ending May, after rising 2.3% over 12 months ending April. The all items less food and energy index rose 2.8% over the last 12 months. Interesting. So inflation has had an uptick last month. The energy index decreased 3.5%. Now, this is very interesting. Inflation is picking up, but at the same time, the energy index is decreasing. Very interesting. Now, if we had inflation rising and energy also rising, then that will create major concerns for us. But we are seeing inflation picking up, but energy decreasing, which is kind of good because oil prices, and we saw that when you look at WTI, oh, about to be stopped out. When you look at WTI, I don't believe I'm in oil positions. Yeah, oil is going good. When you're looking at WTI, we did bottom out at 60 something. It was around $58 a barrel. Let's look at this chart. Whereby we came close to around $54. So the low was at $60 a barrel. Yeah. So the low came out at 60. Was it saying 60? 54, sorry. The low was at $54 a barrel, $54.7 a barrel, and we did find the bottom, and then the prices of oil are currently now picking up. Now, at the same time, you want a perfect balance between relatively low oil prices and relatively high oil prices, because the higher the oil prices, it means that everything else, it creates a ripple effect in the economy, whereby if oil prices are high, it means all of the assets, everything is going to follow prices of oil. Now, this is the complete table. It's a lot of data. It's a lot of data. When you look at motor oil, fuel, eggs, blah, 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 food at home, frozen, ham, pork chops, poultry, eggs, milk, fresh whole fruits, bananas, apples, citrus fruits, vegetables, potatoes. So this is CPI, consumers. Anything that a consumer consumes is in this document. So this is the consumer price index. And this is a very, very important data to be looking at. Very, very important data to be looking at, because this is going to have an impact over what is going to happen next week in terms of Jerome Powell's speech. And this is something that I'm really looking forward to. I'm really looking forward to Jerome Powell's speech next week, whereby, yes, we can say that inflation is not that bad. It's not that bad. Yes, we have had an uptick from last month, whereby we were looking, let's look at trading economics. I do believe that's going to have a much better, going to have a much better presentation of what is currently happening. Yeah, so they call it soft. So this is the S&P 500, if I'm not wrong. Okay. The inflation came in softer than expected, boosting hopes for rate cuts. That's something that we are really looking into. S&P 500 futures rose 0.4%, Nasdaq gained 0.5%, Dow Jones climbed 130 points, CPI rose 2.4% in May, below the 2.5%. Now we were forecasting at 2.5%, so actually we came in lower than forecast, which is good. While monthly inflation edged up just 0.1%, driven mainly by shelter costs. And I want to look into this data. Shelter and medical reports. The report eased concerns over reacceleration in inflation. Sentiment was further lifted by progress in US-China trade talks. President Trump said China will supply rare earths to the US upfront as part of a deal, calling the relationship excellent. Though the agreement awaits final approval with President Xi, is it Xi or Xi? The US will impose 55% tariffs compared to 10% from China. Very interesting. Key tech stocks include Nvidia, Microsoft, Apple, Amazon, and Meta rose between 0.4 and 0.7% in pre-market trading. Now, I want us to go to indicators, and I want us to go to inflation, and then US. Where are you, darling? Okay, so these are the inflation numbers that we have. So it accelerated for the first time in 4 months to 2.4%. Which is good. You don't want you don't want deflation. Yeah, you want a balance, because low inflation means that no money is essentially moving. Whenever you have really low inflation, no money is moving. So you want a balance. You want that uptick, and this is what you've been saying. So for the first time in 4 months, for the first time in 4 months, inflation has an uptick to 2.4%. In May 2025 from 2021 lows of 2.3% in April, but was below forecasts of 2.5%. On a monthly basis, the CPI is expected edged up 0.1% below 0.2% in the previous month and forecasts of 0.2%. The index for shelter rose 0.3% and was the primary factor in all the items' monthly increase. In contrast, the energy index declined 1%. Meanwhile, annual core inflation, which excludes volatile food and energy prices, remained at 2.8%, holding at 2021 lows, while expectations were pointing to a rise to 2.9%. The monthly core CPI also edged up 0.1% below 0.2% in April, and expectations of 0.3%. So this is the numbers that came out today. So this was last month's data. Now we are in June. We are in June, but this is last month's data. So looking at May, we did have a slight uptick in inflation. Looking at the chart is relatively healthy. 2.4% and 2% is not that big of a difference. 0.4% in terms of inflation is not that different. It's not that major. Looking at where we have come from in terms of inflation, back from 9.1% in the peak of June 2022, looking at the data, this is quite good looking at it, whereby the next course of action is we are going to be looking at PPI numbers, which is going to come out tomorrow. So we are going to have a live stream also tomorrow, whereby we are going to, now today we are looking at consumers, tomorrow we'll be looking at producers, whereby we want to see what the numbers are going to be. So the trades are actually going nicely at the moment, and almost stopped out, but I do believe in my stop loss, it's in a healthy position. PPI numbers will come out tomorrow, whereby we do anticipate the numbers actually, PPI and unemployment numbers. We do anticipate an uptick in the in producers price index, whereby the previous number was negative 0.5%. We are actually anticipating a 0.2% for tomorrow, which is quite good for us to be looking at the financial markets. Now, the final thing I would want us to look at is the CME. Let's look at the numbers, what's come out. So I told you that this is going to, it's going to affect these numbers. Okay, let's wait for the, so it was a 99.9% chance. Now we are at 100%. Interesting. Very interesting. Previously, I do believe it was around, I'll rewind the stream and look at these numbers, but we were looking at it, I don't believe it was at 84.5%. I don't believe so. Has it gone higher or lower? I'll look at the stream. I'll rewind. This is the good thing about recording. I'll rewind the stream, look at it. I don't believe it was at 84.5%. I do believe I remember. Okay, so it's gone higher for September. I remember this one was around 54%. So actually the chances of seeing a rate cut by September 17th are gone higher. So the first rate cut we might see actually might be 17th September. 17th September, which is quite some time away. Eh? The next 3 months or so. It's going to be around 3 months from now, almost 100 days from now. Almost 100 days from now. Quite interesting to be looking at this net information. So once again, I do consider this a successful live stream, very successful live stream that we are having currently at the moment. Very successful live stream. So this is the position I am in currently at the moment before I let you go. So the sell limits were triggered above 33.50. So we are currently approaching my entry price, slightly above entry price, but I want to see how the markets are going to fare for this particular setup. That's going to be it from me, from the Golden Killer, the owner, the curator of the King's Print, the rhythm within the noise. I'll see you in tomorrow's live stream. Take care of yourself. Peace out. May God protect you. May your enemies respect you. And may death neglect you and your family in general. Have a peaceful day. Have a blessed day. Once again, peace out.